Hello everyone, how's it going? I hope that you had a wonderful and profitable day. In this video, we're going to look at Palantir, one of the more interesting, volatile, sought after and sometimes controversial stocks in the market ever since the day it went public, in the heydays of equity speculation at the tail end of the previous cycle that we probably all remember. Before the video begins, I just want to say that if you like my content and want to see more of it, please like and subscribe to my channel. Also, if you want to learn more about the personality and the ascension of one of the Silicon Valley's most talented entrepreneurs, Peter Thiel, who is also the co-founder of Palantir, I highly recommend you to take a look at the book called 0 to 1 down in the description. So, as Palantir's co-founder, his previous ventures include household names like PayPal and Facebook. If you want to play in the startup scene and to understand the mentality of founders, and also maybe to identify what is the next best thing, then this book is the right choice for you. The link is an affiliate link, meaning I get paid a small commission when you buy the book without extra cost for you. And with that being said, let's jump right into today's topic. The first and the most important thing to determine about Palantir is its place that it should take in our portfolio. Palantir is a relatively well-established company with more than 10 years of backstories and track record in the tech sphere, and is a very young public company at the same time. All that combined with the fact that it went public in the height of the cheap capital era's last big push of bullishness. This all meant that its title was bound to be volatile, or at least more volatile than it should, and attracts a large amount of retail traders. But it doesn't mean that it's going to bounce around like a penny stock, probably because even though it has a very dynamic and retail-heavy shareholder base, its structure is more lined up to be an investment holding. So what I'm trying to get at here is that the company's profile encourages people to speculate on the shares of an established company. The volatility may generate many interesting experiences, but we should not lose sight that Palantir does have the profile of a long-term investment. Now, with that being said, let's also take a look at the recent price actions. Over the past few trading sessions, Palantir's price went from a relative low of $8.30 to $8.73, marking an increase of 5%. If we look at the trend over a month, the price went up by 8% from $8.08 right up to $8.73. At the moment, things are looking on the up and up, probably as a result of the recent sell-off. So, simply put, Palantir has been stabilizing after a long period of heavy sell-offs. The market is now having little to no interest in keep pushing the stock lower, especially below the $8 level for any sustained period of time. It doesn't mean that it's never going to happen, but so far, historic data shows that the market has little to no appetite to see its share price collapsing, which also demonstrates that there is probably a large potential for additional demand by people who have put Palantir on their watch list, but not necessarily in their portfolio. The main takeaway from all this is that Palantir is now having a fairly stable floor that it can realistically rely on, and that unless there's additional catalysts coming on, the prices will probably stabilize. Fundamentally, Palantir has been mostly following its development plan to eventually diversify its clientele from only large multinational or government departments or public sector partners to a wider spectrum of companies using their product as a off-the-shelf, standardized, plug-and-play component to their business, a bit like buying a very advanced dashboard to better read the data and extract the information out of it. So, as we know, the data is going to be one of the most important resources in the economy of tomorrow. Every decision and action will generate large amount of data that may enhance the decision-making capacity of businesses. Palantir has been one of the first startups in the field, And what sets them apart from the competition is the deep relationships they were able to manage and secure and to enhance over the years with clients with very deep pockets: DOJ, DOD, Border Control, law enforcement, so on and so forth, right? And then at the same time, the multinationals as well. So with clients like those, my belief, my understanding, and of course my humble opinion and educated guess is that the cash flow is going to be more stable and also more generous. The reason I'm adding generous is simply because even though we give our tax money to public entities for stewardship, ultimately it's not their own money. You follow what I'm trying to say? So this is why if they need something to get done, they might get more generous in the amount that they pay. At least this is the general impression that I have, especially when we're talking about DOD in this case. So the potential for scaling up the operations are also readily available. Like if the feedback from the people who have been using the initial experiences or the initial projects is positive. If that's the case, probably the sky is not even the limit. Of course, what also lies ahead is a very turbulent investment environment. And one of the main reasons why Palantir is having such a hard time getting its price up is because the global financial market, your money, my money, the people who have money under their management, essentially the money that's ready for investment or speculation, more commonly called trading. Well, this money is not exactly flowing towards this kind of stocks. You see what I'm getting at? Like, basically, Palantir is one of those stocks that really needs money in order to grow. And its capacity to grow simply from a fundamental perspective exists, but it's relatively weak in terms of momentum. So this is something that's a result of, first of all, the armed conflict around the world, and also because we have been artificially prolonging let's call it an artificial prosperity for about 15 years at this point. It means that we will certainly witness some large sell-offs or even bankruptcies in the equities, while the prices and expectations will eventually correct back to the new normal. So, in other words, what lies ahead is a black hole of capital unless things change on a macroeconomic scale. Stocks like Palantir need an environment where there's a lot of cheap money or free money laying around, and then they absorb this free money to push up their own price. This happened systematically or on a very large scale in 2008 and beyond. So the other method is by having excellent fundamentals, but that may take time. Nevertheless, just like we've mentioned in the beginning, our intention here is to consider Palantir as an investment, a long-term investment to be included in our portfolio, with the assumption that its potentials will be fully showcased in the years to come on a fundamental manner. This is why the current deflation in the tech sector is actually a good news for all of us, and any price dip can then be used as an opportunity to grow our position at a low cost. Now, my recommendation for Palantir, based on everything I've said, is to buy it now, but also to stretch the purchasing period for up to a few months from now. The stock is fairly cheap and shows clearly, like there are many signs, that it's not going to keep going lower unless new catalysts occur. The maximum exposure I would therefore recommend is between 3 to 5% of your portfolio.